This is Horizon's Middle East and Africa, our top stories this morning. Israel rejects a ceasefire plan backed by Hamas. It vows to continue its operation in Rafah, but they will still send a delegation to meet with mediators. Oil rising on tensions in the Middle East. Asian stocks follow Wall Street higher on optimism that the Fed will begin cutting rates this year. Plus, we speak exclusively to the CFO of ADNOC Gas as the energy firm reports earnings. Well, it's just gone 8 a.m. across the Emirates. I'm Joumanna Bercetche here in Dubai. Let's get a check on how markets are faring. The theme is still risk on for these global markets. A positive close for S&P and Nasdaq yesterday as traders start bringing in the timing of that first rate cut from the Fed, now sitting around September. You can see behind me, we've got the MSCI Asia Pacific Index leaning into some of that positivity, also up around 0.2% today. The S&P futures seen also building on some of the positive momentum from yesterday, but only up about 5 basis points. 10-year yields obviously still in focus, sitting around 4.5%, but worth bearing in mind, we've rallied about 20 basis points since that Fed meeting just around a week ago. So a long way to travel for fixed income. Gold obviously in focus as well. A safe haven bid is currently going through for that commodity. Switching over to oil, in focus here as well as we talk about building geopolitical premium into this curve. And what's interesting is our terminal chart today is showing that oil has sort of settled in this $80 to $85 range. And you can see it is broadly a tight range. We broke through it over the course of the last couple of months. Geopolitical premium being built in, supply cuts weighing in as well. Supply, big focus for the commodity at this point in time. But we are back through 85 to the downside. Interesting to see where we will go from here into those OPEC meetings, the big decision in a couple of weeks' time as well. But let's check in on how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Avril, what is the latest this morning?
Yeah, we're seeing a bit of a mixed bag in the Asia Pacific, even though the gauge of stocks is sitting a bit higher. It's thanks to what we're seeing in Japan and South Korea, that Fed optimism. Japan, of course, playing catch up after the long weekend, but we're seeing that drag coming through from Chinese equities. The Hang Seng on track to snap a 10-session winning streak, and that's despite positive news flow coming out from the Chinese property sector, the likes of Shenzhen, the tech hub, and the Tier 1 city relaxing some of its home buying restrictions. Of course, we're also keeping an eye on dollar yen that's been nudging towards the 155 level as traders refocus on the yield differentials. That's, of course, something that's been helping the Japanese equities. The other currency that we've been watching today is the Aussie, as we'll hear from the Reserve Bank of Australia later this hour. And traders have mostly been pricing for, if you can flip the board, take a look at the RBA expectations, mostly been pricing for hawkish Reserve Bank of Australia, although we did get retail sales numbers that fell more than expected out of Australia today, so the path forward seems a bit less clear, Joumanna.
Avril, thank you so much for that overview, and of course all eyes on that RBA decision that's coming out at the bottom of this hour. Now, our top geopolitical news today, Israel has rejected a ceasefire plan backed by Hamas, the country's war cabinet saying the proposal falls far short of their necessary demands. It also vows to continue military operations in Rafah after warning civilians to move out of parts of the city. However, Israel says it will still send a delegation to meet with mediators. Hamas and Israel have been negotiating via Qatar, Egypt, and the U.S. on an agreement that would see the release of Israeli hostages held in Gaza in exchange for Palestinians detained in Israeli jails. It also includes a pause in fighting. Bloomberg's Middle East economy and government editor Paul Wallace is here with more. Paul, a lot of news to digest over the last 24 hours. At one point in the evening, it seemed as though a truce was in sight, but then, of course, the Israeli side came back and said that there were parts of the proposal that were unacceptable. Is there still hope for a truce deal to be agreed at this point?
Hi, Joumanna. There is, and these, as you mentioned, these negotiations are continuing. The next stop for those is Cairo, where envoys will head back to. However, things certainly do not look great, and if anything, it seems like there's been a bit of regression in the last 2 days as far as the negotiations are concerned.
Yeah.
Israel rejected a proposal that Hamas said it had accepted. However, it's still unclear what exactly was in that proposal. As far as Israel is concerned, and from what Israeli officials have said, it clearly didn't include everything, or it wasn't exactly as they were expecting over the weekend.
And as you say, details are still thin on the ground. We don't know exactly what is included in that proposal, but what we do know is it's not enough to get Israel over the line. There is also talk that the Hamas side have been pushing not just for a ceasefire, but what they're calling, quote unquote, a period of sustainable calm or a permanent cessation of military and hostile operations. What appetite is there from the Israeli side to go along with that, do you think?
I think very little, and this is a big sticking point at the moment. Broadly, the two sides are agreed on how many hostages should be released and how quickly, and how many Palestinians detained in Israeli jails should be let out. But what they're not agreed on is Hamas wanting the war effectively to end when there's a truce. So it wants a ceasefire to be permanent to all intents and purposes. Yeah. Israel does not. It says it still wants to destroy Hamas as a military organization. The group still has several thousand fighters in Rafah, and Israel says that until that happens, until those units are destroyed, the war cannot be over. Israel is still intent on achieving what Prime Minister Benjamin Netanyahu calls total victory, and in his eyes that doesn't happen until Hamas is no longer standing as a military organization.
And of course, many Israeli families are standing by waiting for the release of those hostages as well. Paul, obviously we will be covering more of this story, but thank you for giving us an overview of the latest in the last 24 hours. That was Paul Wallace, Bloomberg's Middle East economy and government editor. Well, let's bring in Fleur Hassan-Nahoum, Special Envoy to Israel's Foreign Ministry and former Deputy Mayor of Jerusalem. Good morning to you, Fleur. You probably heard my discussion now with my colleague talking about the terms of the truce. Let me just put the question to you. What is it about the proposal put forward by Hamas yesterday that proved unpalatable to Israel?
Well, first of all, you have to understand that this is the fifth deal that has been offered to Hamas. And instead of accepting or rejecting it, what Hamas has done is come with a counteroffer that is very far from the last very generous offer of Israel. And the sticking point really is, as you mentioned earlier, does Hamas stay on its feet after the war? And to Israel, Hamas is not just another aggressive regime. It is an existential threat, because the massacre of October 7th, they have continuously repeated that they wish to do again and again. So Israel cannot remain safe if Hamas remains in control of the Gaza Strip. And that's really the sticking point. And as you can understand, as America would not have allowed Osama bin Laden to stay in his place with the power that he had, and ISIS to remain as a party or as a movement in the Middle East, this is what we're facing right now.
The fact that these discussions are still taking place, and Prime Minister Netanyahu has suggested that delegates will still continue these conversations with Hamas, does that not also, in your eyes, legitimize Hamas as a political party?
Look, ultimately, we're doing this through mediators, through Qatar, through Egypt, our neighbor who we have peace with. And we have no choice, because we have 132 hostages there. We don't know how many of them are alive, because we haven't received any proof of life from them. But ultimately, we owe it to those families to try our best at every given juncture to try and get them home. They cannot remain there in those terror tunnels. God knows what they're experiencing. We have a 1-year-old baby. We have 80-year-old people. And so in order to get the two objectives of the goal, one is to bring the hostages, and two is to make sure that Hamas does not continue to exist ruling the Gaza Strip, not just for Israel, but for its own people. They have brought countless horrors to their own people.
Let me me just ask you what happens at Rafah next, because there have been reports for months now, suggestions that a new front is going to open up in Rafah and that Israel are going to go ahead with that offensive, despite warnings from the UN, from the US, that this would cause another severe humanitarian crisis within Rafah. What is the appetite from Israeli side to go ahead with that offensive, and why would you do it if it would risk putting a wall between you and your closest allies?
Well, there's not going to be a war with Egypt. That's definitely out of the question. Egypt understands who Hamas are. Egypt has spent the last 10 years trying to get rid of their own Muslim Brotherhood version of Hamas within their territory. So I'm not concerned about that. Look, we proposed 5 different deals, and Hamas at every given point said no. The only time they began to say yes or show any type of flexibility is when they knew a Rafah offensive was imminent. That's the only time they showed any type of appetite to continue talking about a deal. So Israel has to continue with its offensive, mainly because Hamas, this is the only time they will actually get to the point of any compromise. And that's why we have to go ahead with Rafah. It's very sad that we got to this point. 2 months ago, we did not go into Rafah because the whole world tried to mediate a truce with Hamas, and Hamas was having none of it for the last 2 months.
Let's go back to the talks about the truce and where we go from here. In your eyes, is there still a possibility, is there hope that this truce can get over the line?
I think there's hope. The Prime Minister sent a delegation to continue to talk the terms, to see if we can actually close the gap between Israel's minimum and Hamas's minimum. So it's not over. There is hope. I am, connected to many of the hostage families, and I pray for their return every day. And I really hope that we can close those gaps and we can start talking about returning those innocent people home. But what's really disturbing to me actually this morning is that one of the statements that Hamas made was like, if they can't find 32 hostages alive, they will compensate with dead bodies. What does that mean? There's 132 people in there. What does that mean they can't find 32 people alive? That really is disturbing to me this morning. And I hope that we can get not just the hostages, but proof of life of the rest of them.
Fleur, thank you so much for joining us on our show this morning. We appreciate you coming on. Thank you, Fleur Hassan-Nahoum, Special Envoy to Israel's Foreign Ministry and former Deputy Mayor of Jerusalem. Well, still ahead on our show today, ADNOC Gas CFO Peter van Driel joins us exclusively to break down their quarterly results. This is Bloomberg.
So the jobs number, in a way, while it was lower, it's actually encouraging to think, okay, now we're going to start to see maybe a way forward where we're having a, they always call it a soft landing, but a way for us to slowly slow the economy, manage down the inflationary environment, and therefore be able to lower the cost of capital over time.
For me, it's really looking at the totality of the data, not just looking at an employment report or a CPI or other piece of information. You really want to make sure we're looking at the broad picture. We have the maximum employment and price stability goals. So we want to, from my perspective, see all the data and information that speaks to all of that. And really, as the data, come in, hopefully we'll be moving in the direction we want to see, both on inflation and in terms of restoring balance to the economy. And then we'll make our decisions based on that.
That was the New York Fed President John Williams and the NASDAQ CEO Adina Friedman speaking to me yesterday. We were talking about the state of the fintech industry, but of course I had to bring in macro. Let's also bring in for this discussion Nannette Hechler-Fayd'herbe, the EMEA CIO at Lombard Odier. Wonderful to have you with us here in Dubai also. Let's just pick up on the market narrative right now. It feels as though Friday's NFP print was a real turning point because traders once more started thinking about the timing of this first rate cut. For a while, it was looking as though people were starting to think about rate hikes again, but now we're back to the rate cut narrative. How pivotal of a number do you think the NFP print was in terms of market direction?
I think it was really soothing this sentiment that was growing nervous about all the inflation data that had preceded. And for the inflation outlook, having a softer jobs report, a softer payroll, and also slightly higher unemployment rate, wage growth being below expectations just means that services inflation is headed the right way. And services inflation is the most important one in the outlook for now.
What do you make of Powell pushing back so much against this prospect of rate hikes in the press conference?
I think it is all about directing expectations, right? On the one hand, they don't want to be over-promising and they don't want the market to go ahead of itself. And on the other hand, it also doesn't want the market to just go down in a less controlled way. So I think it is all about managing expectations, really.
How many rate cuts are you penciling for this year?
We think it's going to be somewhere between 2 or 3. Right. Our base case is for 3 rate cuts starting in July, probably.
So here's the question I have for the rate cutting community. Core PCE, which is the indicator that the Fed looks at, is still closer to 3% than it is to 2%. Do you believe that that number can still get to 2% if the Fed start the rate cutting cycle in the next couple of months?
I think so. I mean, in terms of just looking at how the consumption is behaving and the softness of that, how this is related to the labor market, I think we are headed the right way. I mean, what the Fed really needs is not so much the point number to be out in reach, but the direction to give it confidence that it is on the right path. So I believe there is very good room for rate cuts.
Okay, so how does that translate to market opportunities then? We've been tracking equities. Things have been doing well since mid last week. Rates obviously rallying a lot too. The dollar has started softening. Do those trends continue?
Look, I think the most important opportunity for investors right now is to seize the rate levels that are attractive. Yeah. I mean, consider that for a moment. In spite of all the rethinking around how many rate cuts could actually be done in this year, the equity market has been so strong since the beginning of the year. And contrast that to what fixed income has done. And I think at this moment, really being overweight in fixed income does make a lot of sense.
Do you have a target on where the 10-year yield could get to?
I think we are headed towards 4%.
Okay.
And this would be our 12 months target and forecast for sure.
When you think about not just the Fed, but central banks around the world as well, we have the Bank of England this week, RBA, in just a few minutes now. Where do you think the Fed stands in terms of setting the standard of beginning the rate cutting cycle versus other central banks? Are they going to be inclined to wait for the Fed, or do you think that individual country dynamics are going to have to precede?
I think idiosyncratic and individual dynamics are all about 2024. The Swiss National Bank has been standing out as the very first of the well-regarded central banks to cut interest rates, and it will probably be followed by the ECB before the Fed actually starts. So I think there is just the dynamics about central banks going to be very individual, and contrast that to Bank of Japan that is very late in the hiking cycle. Yeah. So at a completely opposite end.
Yeah, so then how do you tie that back to the dollar then? Again, the theme of last year was U.S. exceptionalism, and even when we talk about rate cuts, other central banks around the world seem to want to get going. To your point, SNB have started, maybe ECB have been hinting strongly that they're going to go in the summer as well. In that environment, in a game of relativity, the dollar still is king, isn't it?
I think so. We are still betting on the dollar, certainly against most developed markets currencies. Against emerging market currencies, it may differ a little bit, but overall, the dollar remains strong.
Yeah, it seems to be the case. And Nannette, I'm going to leave it there. It's so wonderful to have you with us on the show.
Thank you.
Enjoy your time in Dubai. Nannette Hechler-Fayd'herbe, the EMEA CIO at Lombard Odier. Also coming up on our show, Aramco's profit in focus ahead of first quarter results out later today. We will have a preview coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai. Aramco's profit and shareholder payouts are in focus ahead of first quarter results out today. The Saudi oil giant has lowered its production since the second quarter of last year in line with the OPEC Plus cuts. So let's get more from Bloomberg's Middle East energy editor, Anthony De Paula. Good to have you with me on the show. The first time you joined me on the set, so it's good to have your perspectives. Let's just talk specifically about Aramco. Clearly, they've had to cut down on production in line with these OPEC Plus cuts, but at the same time, oil prices are higher. So what does that mean for net profit?
Yeah, good morning. It's good to be here. Yeah, it's likely that production decrease is going to hurt the profit going forward. Bloomberg Intelligence is forecasting about a 10% decline in the net profit. And if you look on a quarter-to-quarter basis, we've got very little movement actually between the two quarters in the oil price. So we have seen that come up so far this year, but on a quarter-to-quarter basis, we're pretty much there. So that decline in production is going to impact the profit. As you mentioned, they've had to cut that because of the OPEC Plus cuts, plus those voluntary cuts that many OPEC members led by Saudi Arabia have made. So they're producing around about 9 million barrels a day at the moment. That could change going forward later this year if OPEC Plus sees that demand coming in, sees stockpiles reducing. But so far, they're round about that level.
What about income from SABIC? SABIC has been disappointing, the petrochemicals arm. How likely is that to pose a drag on overall earnings?
Yeah, well, Saudi Arabia is the majority owner there, so that is going to have an impact there. And we've seen the global petrochemical industry suffering basically because of things like feedstock prices, simply energy costs in terms of running a lot of chemical plants. And so that's impacted more kind of the European aspect of the chemical business. So we've seen a lot of those Middle Eastern producers doing a little bit better. But yeah, SABIC is having some problems, so that is going to weigh on Aramco this quarter.
All right, we'll keep an eye out for the earnings later today. Anthony De Paula, thank you so much for joining us on the show. A quick check at how oil is faring as we take into consideration the geopolitical risk premium that is building into the curve. And you can see that we are trading just shy of $84 now, so 83.60. So we're at about 0.3% firmer. At NYMEX crude oil also just sitting below $79 as well. This as we head into that all-important OPEC Plus meeting in a couple of weeks' time. At this point, the market is not expecting any change when it comes to those output quotas, but of course things could change, and again geopolitics on the horizon as well. So that is your check for crude oil right now. But coming up, we are going to be assessing where things stand in the war in Gaza as truce talks falter. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Israel rejects a ceasefire plan backed by Hamas. It vows to continue its operation in Rafah, but will still send a delegation to meet with mediators. Oil rising on tensions in the Middle East. Asian stocks follow Wall Street higher on optimism that the Fed will begin cutting rates this year. Plus, we speak exclusively to the CFO of ADNOC Gas as the energy firm reports earnings. And it's just gone 8:30 a.m. across the Emirates. I'm Joumanna Bercetche in Dubai. Some breaking news we want to bring to you. The RBA have decided to keep rates unchanged, so keeping the cash rate target at 4.35%. Let me just bring you a little bit more commentary that we're getting from the RBA. The board is not ruling anything in or out. RBA needs to be confident that inflation is moving sustainably to target inflation is falling more gradually than expected. And of course, they're referring to the surprisingly high quarterly prints we had at the last quarter, above market's expectations. Further commentary from the RBA saying wages growth are above sustainable level given productivity, inflation easing slower than previously expected. So more commentary is coming through, but what we can see is the Aussie has dropped, the Aussie dollar down about 0.3% on the day after this announcement came out. Some people thought that perhaps they may even go for a rate hike or perhaps sound more hawkish with the commentary. But let's get out to Avril in Singapore for reaction across these markets to that RBA decision to keep rates unchanged. Avril.
Yeah, keeping things unchanged, but I guess what you alluded to is the inflation outlook of the RBA. As inflation eases more slowly than the central bank has hoped, that seems to strike a more hawkish tone from the Australian central bank. Of course, the attention will be shifting to the words of the RBA governor in the next hour. And as we sift through that statement, we are seeing the Aussie losing ground, pulling away from 67 US cents. Pressure coming through a little on the policy-sensitive 2-year, and the Australian stock still hanging on to the gains of about 9/10, fueled, of course, as well from the narrative that the Fed rate cuts are still on the table this year. Lots to talk through when it comes to central banks today, Joumanna.
Avril, thank you so much for that overview once more. All right, a quick market check on our side. Avril just alluded to this, but MSCI APAC is doing quite well, so up about 0.2% today on the session, building on some of the positivity we had at the U.S. session. S&P futures also leaning towards the green. We've got 10-year sitting below 4.5%. Gold also in focus. The safe haven commodity tends to benefit as the market prices in more rate cuts. So we're keeping an eye on the price of gold. It is, of course, up 12% for the year. But our main geopolitical news. Israel has rejected a ceasefire plan backed by Hamas, with the country's war cabinet saying the proposal falls far short of their necessary demands. But officials say a delegation will still meet with negotiators in Cairo. Israel is promising to continue military operations in Rafah after warning civilians to move out of parts of the city. Joining us now is Sorana Parvulescu, the Control Risks Group EMEA Partner. Thank you for joining us. This is a big deal. We were speaking about it earlier on the show and the potential of a breakthrough with Israel-Hamas. But it seems as though Israel are not happy with the proposals that are on the table at this point in time. Let me just ask you this. Is a lasting ceasefire actually achievable at this point?
I think that's a critical question. And as you say, we are at a critical point now where that may be more likely than it has ever been in the last few months, I think. Clearly, the two sides have maximalist demands, right? Mm-hmm. Israel does not want a lasting ceasefire until it has secured hostages, but also has sort of met its vow to defeat Hamas, which according to Prime Minister Netanyahu hasn't happened yet. Hamas has an interest in agreeing a ceasefire because it will leave another day to fight, right? Mm-hmm. So it is a critical moment where the pressures have gathered to the boiling point, yeah. And it may become possible to actually end up with a deal. Yeah,
you know, one of the paradoxes I see is the whole goal from Israel's perspective of going ahead with the invasion, the war in Gaza, was to neutralize Hamas. That's what they wanted to do. And yet here we are 7 months later. You have more than 30,000 casualties on the Palestinian side. The Israeli hostages are still being held by Hamas. There are truce talks taking place between Israel, mediated by U.S., Egypt, and Qatar, but Hamas is still the other side. So if their goal was to neutralize or defeat Hamas, that hasn't happened. And that's why it's going to be difficult for them to get this over the line, because if their goal was to neutralize them, in a way, by going ahead with this truce deal, they're also legitimizing them as a political party.
Classic catch-22 situation, right? You can't. Israel doesn't see a future of Gaza with Hamas in it, but it has to work with Hamas to end up with a resolution, and that has made the situation extremely complicated. And then, of course, you have the set of constraints that each of these sides have internally. Domestically, Prime Minister Netanyahu has a lot of pressure internally, both from protesters who are demanding that he goes forward to release the hostages, but also from his political allies who are intent on a Rafah operation.
If this truce deal falls apart, how likely is it, you think, for Israel to go ahead with the offensive into Rafah?
I think to some extent they already have started an operation in Rafah. They have called it limited, and I think there is a chance that they will strike in Rafah sufficiently and occupy positions in Rafah, the idea of sufficiently to be able to allow Netanyahu to call that a success, together with the release of hostages, and that would create the opening to get a ceasefire. The alternative is that you'll have a more prolonged operation in Rafah, but still, I think, with a lot more focus on the humanitarian situation and more surgical than sort of full-scale invasion.
I just wonder what that all means for Israel's standing within the international community, because many, including their closest ally, U.S., President Biden, has warned Netanyahu not to go ahead for the offensive from a humanitarian perspective. You hear it from the UN as well. If they do decide to go forward with the attack on Rafah, what does that do to Israel's standing within the international community and some of these deep relationships that they have with their Western allies?
I mean, certainly Israel's been more and more isolated in the last few months, at the very least, throughout the conflict. Hamas is actually encouraging that, or sort of appreciating that, because it weakens Israel's position, right, to negotiations, and has come to this point. I think some of the stronger allies will still be there, and we have to understand as well that for Israel, as it is for Hamas, for Israel this is an existential threat, and particularly for Prime Minister Netanyahu, it is an existential threat, and that's what makes it the tensions.
A final quick one. How close are you watching what's happening in southern Lebanon, the northern border with Israel, the daily crossfire exchange between Israel and Hezbollah?
Yeah, those have died down a bit. I think both the Houthis in the Red Sea and the Hezbollah attacks will continue. If we see more operations in Rafah, we will see an intensification of these attacks, but probably we expect them to be within the parameters that we've seen until now, so tit for tat, no further escalation.
All right, yeah, well, at least no further escalation there for the time being. Thank you so much for joining me on the show today. Valuable to hear your perspectives. That was Sorana Parvulescu, Controlled Risks Group EMEA Partner. Also coming up, we ask whether Chad and Togo's presidential elections can deliver meaningful change. That conversation also coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai. Well, we have been monitoring the headlines coming out of Israel over the course of the last 24 hours. And what we are hearing now is that the Qatar are saying a delegation is heading to Cairo Tuesday for truce talks. So these ongoing negotiations are still occurring between the two sides, between Israel and Hamas, mediated by Egypt, by Qatar, and the U.S. Al Jazeera also reporting now that Israel troops have now entered the Rafah crossing south of Gaza Strip. So this is per Al Jazeera, and as we have been mentioning on the show, the focus is, of course, what Israel decides to do in Rafah and whether they go along for the attack. Now, Hamas says movement of people, aid has now stopped at the Rafah crossing. Hamas says the movement of people has now stopped. So we are also getting a commentary out of the Hamas side of the equation saying that both the movement of people and humanitarian aid, the Rafah being crucial to the delivery of humanitarian aid to the rest of the Strip, has now been stopped. So some breaking news there. All right. In Chad, votes are being counted in a long-delayed presidential election with military leader Mohamed Deby widely expected to win. Meanwhile, Togo's ruling party has won a landslide in last week's elections, setting the stage for the family dynasty to extend its 57-year rule. Let's bring in Bloomberg's Odier Ganga, who is in Kigali. And Odier, just give us a sense for how these elections in Chad are going to play out and what it means for the economy.
If we start with Chad, it's almost a case of you can't have your cake and eat it. Leading to this election, there has been growing anti-French sentiment in the country. And this is because President Hechler-Fayd'herbe wants to be seen as an independent and less dependent on the West. And also the people want to feel like they're in a sovereign country. And so this is the reason why America is becoming the casualty. They only have 100 troops in the country, but authorities have said that their presence there is illegal. They're fighting beside 1,000 French troops trying to curtail insurgencies in the region. The U.S. has already said they'll begin withdrawing their troops, but France is not going anywhere. They have too much of a strategic relationship with Chad to be able to leave. Leading to these elections, a couple of issues are key to the people of Niger, one of them being security, the other being reducing the cost of living. But to Chad's external partners, what they're very keen on is maintaining regional stability and the flow of refugees. There are 500,000 of them in Chad, and the fear is that they might start trying to make their way to Europe.
And what about the elections in Togo? What are some of the key takeaways over there? What does that mean for the economy there too?
These are very interesting elections for the region because, one, they were postponed twice, and just a week leading to the voting date, we saw constitutional amendment that removed presidential term and also saw that the president will be elected by a parliamentary system. Critics have said that this is a political move by the president to stay in power for longer. And the people at the polling station said they hope they were able to have a say in who becomes president. Their issues also remain structural and fundamental issues. Security is one of them. Infrastructure, electricity, but most importantly, poverty alleviation, because the World Bank estimates that 40% of that country live in poverty.
Bloomberg's Odier Ganga, thank you so much for that overview of the elections, and obviously crucial for both of those economies. Thank you. And we will bring you the latest from how those elections unfold. We are just getting now, well, we should be getting the results, the earnings out of UBS. And this is going to be a crucial one, actually quite an interesting one. A lot of focus on their capital position. Worth pointing out that UBS shares have lost about $9 billion of market cap since the publication of those too big to fail rules out of the Swiss authorities. So this is what we're getting in terms of headlines. The pre-tax profit has come in at $2.38 billion. That is a big beat versus the estimate of 1.16. Net income, 1.76 billion versus estimates of 598. So very big beat on net income, pre-tax profit as well. UBS says it has capital ratio for 2024 capital return goals. That was a big focus for investors ever since the takeover. A lot of questions about their share buyback and distribution programs. But UBS are now confirming that they will have the capital to go ahead with those capital return goals. UBS to achieve another $1.5 billion in cost savings by the end of 2024. Remember, this was a big focus of the CEO, Sergio Armati, since he came in, took over Credit Suisse. Cost savings, cost synergies, what they can do to save several $1 billion over the course of the next couple of years. UBS sees $1.3 billion of integration-related expenses in the second quarter. Low to mid-single-digit decline in global wealth management, NII, in second quarter. That is also a key figure to pick up on. Why? Because a lot of the income that comes into UBS is derived from their wealth management unit. The fact that their net interest income is now seeing a decline, a single-digit decline, is perhaps not so promising for markets. So something to bear in mind there. But headline is we had a very strong beat on both the top line and the bottom line. And they have also said that they plan to continue with their capital buyback plan. So do not miss our interview. Francine Lacroix is going to be sitting down with the CEO, Sergio Armati, at 10 a.m. Dubai time. That will be happening at 7 in the morning, UK time. Also coming up on our show, ADNOC Gas reports first quarter revenue that comes in strong. We speak to the CFO of ADNOC Gas next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai. ADNOC Gas reports first quarter revenue that grew 16% from last year. The company has been expanding capex and plans to invest over $13 billion through 2028. Let's bring in Peter van Driel, ADNOC Gas CFO. Wonderful to have you with us on the show. Maybe let's just start with that headline number. Your first quarter revenue has come in at around 6 billion versus 5.2 billion estimates. So it feels as though it has been a good year. How would you describe it in your own words?
I think it was a very strong performance in the first quarter, Johanna. Revenues, as you say, $6 billion, which is 16% up. Also, EBITDA was strong, $2 billion. And then last but not least, net income, $1.2 billion in the quarter, which is 20% higher than the first quarter of 23. So all but all, a very strong quarter for ADNOC Gas.
Where do you think growth is going to come from in the future? I know in the past you've talked about growing on an international scale, acquiring new positions in other parts of the world, including in Europe and India, China, Southeast Asia. Which of those markets are you looking to enhance your growth profile in the future?
As you say, ADNOC Gas is very much about a growth story. We will spend at least $13 billion in the next 5 years. That growth is organic growth. The growth will be in the UAE. We saw, by the way, in the first quarter that also the growth in revenues was largely contributable to the UAE demand. We're the biggest petrochemical supplier of feedstock, and we supply about 60% of all the gas in the UAE. So it is a balance of growth inside country and international growth that we also, of course, pursue in order to support that growth story.
Right. So coming back to that $13 billion that you plan on investing, what does that do to your margins? And how do you foresee margin growth alongside the investments that you're putting in?
Right. ADNOC Gas, so we produce gas or we liquefy gas, right? That is what we're doing. We will grow, as I said, internationally and domestically. And with that, we believe that in the next 5 years, our volumes will at least go up by 20%, if not more. So there's a clear line of sight for growth. And that growth, of course, is on one hand strengthening the company, but also the shareholders will benefit from that because we also intend to grow our dividend of $3.25 billion by 5% every year. So it is not just the company growing, but it's also the shareholders benefiting from that growth.
What are you seeing on the demand side from overseas markets, and how do you see things panning out in the context of the global economy, some of the headwinds facing the global economy? What are your signals telling you?
So what we have detected to date is that the economic growth remains strong. And that is evidenced by the fact that our LNG portfolio, for example, continues to deliver cargoes either to the region or to the Far East. We recently concluded a deal with India, GAIL, another 0.5 MTPAs. And that is a clear indication of growth for us. But it's also products like naphtha and condensate that today are all growing. And that is actually what drives this growth in revenue. As I said before, from 5.2 to $6 billion in the quarter, underpinned by growth, domestic and international growth.
Yeah, very clear. Can I just ask you what the status is of ADNOC Gas's debottlenecking of Das Island's LNG plant? When is that going to be completed?
So on Das Island, offshore UAE, we have LNG trains. So that is where we liquefy the gas and then sell it internationally. Debottlenecking is really making the most of what you have. You have certain technical tweaks which enable you to process more LNG in your facilities. So it's a cheaper way to grow. And given the demand for LNG, we're committed to making sure that that capacity stays in line with demand. And if I may add one more comment, you may have heard that, of course, the company is also looking at a new facility, which is called Ruwais LNG. That is 9.6 MTPA.
Yes.
That will be commissioned somewhere in 28. So that means that we will double our LNG export capacity.
Yeah. Very clear. I was going to ask you about capacity, but I think you anticipated my question. Peter, I'm going to leave it there. Thank you so much for joining me today on the show. Peter van Driel, ADNOC Gas CFO. Thank you. Well, let's just recap earnings that we had from UBS this morning. A big signal for the European banking system as a whole, one of the first of the European banks to report. And what we got at the headline level, net income 1.76 billion versus estimates of around 600 million. So huge beat there, coming in almost 3 times what the market had anticipated. In terms of more commentary, we had a beat on the investment bank that also came in higher than expectations. We had the wealth management income come in line with expectations, 1.1 versus estimates of 1.13, always crucial for UBS given how big a part the wealth management group plays in terms of driving their overall profits. UBS expects the merger of UBS AG and Credit Suisse AG on May 31. That is in reference, of course, to the Swiss unit of Credit Suisse, has been a focus for the markets as well. And then this one is interesting, something to watch out for later. UBS sees low to mid-single-digit decline in global wealth management net interest income in the second quarter. So not very positive guidance on net interest income there. But then on the flip side, they have confirmed that they have the capital ratio for 2024 capital return. That is good news for anyone who is getting nervous about their capital distribution plans. But do not miss our interview with Sergio Armati later today. Francine Lacroix will be sitting down with him. See that interview at 10 a.m. Dubai time, 7 a.m. UK time here on Bloomberg TV. Before we let you go, let's take a quick look at how markets are faring. This is a look of equity futures trading sideways, NASDAQ around flat as well. Euro stock futures seen opening up in the green. But that is it for our show. Thank you for watching. This is Bloomberg Horizons Middle East and Africa.